January, there were only two tradable risk event opportunities. Now, they were both very good ones, but it just shows that you have to be patient with these risk events because you don't always get an obvious tradable deviation. The two we got was the NFP print, which came in firmer than markets were expecting. That obviously meant that the labour market was strong. The Fed were under less pressure to cut rates. And so we saw an immediate bid come into the dollar as we were expecting, and we saw immediate downside in the S&P 500. And that was two great opportunities to short the euro dollar. You can see that falling down to that target area, and we were looking to short the S&P 500, and you can see that we had a number of different opportunities there in the futures market, but you can see that the S&P 500, there we go, just dropping down, consistently and constantly after that release. So it did provide, a decent opportunity for anyone looking to get short out of the event. With the European PMIs, we saw a very similar situation where we had firmer than expected German data, which added to that French data. It was a bit mixed, but we said at the risk event that if the German data came in stronger, that would be enough to see a reaction in the euro dollar. Sentiment was very negative for the euro at the time, so anything that could give any kind of relief was likely to be latched on by the markets, and we saw the euro dollar move up to that R3 pivot point. You can see from the release time earlier, just price moving up to the obvious daily pivot point. Another good opportunity in the euro dollar. So only two events, but two good events. So that's the secret with these risk events. You need to wait till you get the right data with the right deviation. So with that being said, now let's look what we're coming up this week. I've got some interesting ones, particularly coming out of the US with the CPI print. Should be very interesting given where we're at with Fed policy and the US administration and their view on tariffs. So there's plenty ahead. But just want to remind ourselves that they don't come along every day or even every week, but when they do come along, they're worth looking for. So what really matters on the calendar this week? Well, the first event to be looking for is the US CPI print. We know since the last summary of economic projections from the Fed, they see inflation being firmer and stickier than they had originally anticipated when they gave their projections back in September 2024. So what we're looking for here is an out of consensus print to the upside or the downside. It should give us two-way opportunities because the inflation data out of the US is so crucial for the Fed's interest rate policy that if we see it coming in higher than markets are expecting, that should support the dollar. If it's weaker than markets are expecting, that should weaken the dollar. So we'll probably play that against the euro dollar pairing, but we will look at it nearer the day to see if there's any better pairings to look at. Dollar yen is often a go-to with the corresponding move that you get in yield. So we'll cover that nearer the time, but definitely one to be looking at. Thursday, we know that the UK is laser focused on growth. It's a major focus of the UK Chancellor. And if we start to see signs of rapidly weakening growth that surprise markets, then that's going to put more pressure on the Bank of England to cut interest rates. With the services inflation now coming down, the last print, the Bank of England is starting to get a little wiggle room, and alarm bells will ring if GDP comes in well below markets' expectations. So we're looking for that on Thursday for a potential opportunity to sell the pound lower. This video, of course, is made before the Bank of England decision that's taking place. So we will adjust expectations depending on what the Bank of England decision says. But at this point of making the video, it definitely looks like one not to miss. We then, just half an hour later, got Swiss CPI. Now, the Swiss National Bank are increasingly moving towards the prospect of negative interest rates. We have had SNB's chair out saying that, negative interest rates are an option, not a preference. The SNB will use them if needed. Forecasting inflation, heading to zero and below this year. So if we start to see a greater than expected drop in Swiss inflation, then we would expect a sharp drop lower in the Swiss franc as the speculation around negative interest rates will grow. So a big drop in Swiss CPI should weaken the Swiss franc. We'll look for a pairing nearer the time, but that's the major calendar events to be looking at this week.